I think everyone's talking about a reopening. I think what we're going to see is sort of a hybrid of COVID life and pre-COVID life. I think that folks will be staying home for work, and some of the things that they got accustomed to doing while they were at home during the lockdowns, they're going to continue to doing just because they're more convenient, right? So I like Peloton. Peloton is one of those stocks that has sold off a ton this year, especially because of the recall of the tread, but also because this notion that if the economy is reopening, people are going to ditch their at-home workouts. I disagree. I think there's huge value in this stock because I think the company has a cult following, and the people that use Pelotons are just addicted to it. And I just think that this stock is going to rebound substantially.
Interesting. It's down 27% year to date, but obviously had a much better May, up about 11%. And Jason, I saw you nodding. Do you have a Peloton bike?
I don't. I do have a number of things to work out at home, but the funny thing is I thought he said telecom, and I was like, yeah, that's a really interesting trade. I like that too, but we're maybe on different sides of the coin.
Got it. So you wouldn't necessarily be a buyer of Peloton. We talked a little bit about Europe. You like some other parts of international equities too. Tell me about that.
Well, look, again, I think there's a couple of dynamics in play here that we've seen over the course of the last year. And for us, names like Taiwan Semi are really, really interesting. Total is a European energy. On the flip side, I really would be cautious on some of the very China-centric names, just because what you're seeing there is maybe what we will see in 6 or even 12 months from the Fed, which is really the PBOC tamping down on a lot of credit growth. So it's a pretty macro moment right now, frankly, and that's uncomfortable for a bunch of folks at Thornburg that look at fundamentals.
Well, and I know you're not big on thinking that we're going to have out-of-control inflation, saying most of the current price spike will reverse as these supply constraints are resolved, that lumber literally grows on trees, and that the double-digit percentage increase in new car prices, for instance, is running out of gas, don't fight the Fed, and so forth. Alan, I was going to get your perspective on that as well, because I think you're a little bit more hesitant about how strong parts of the economy are going to be this year. What is your take on the kind of inflation supply constraint story, and how is that going to impact stocks?
Yeah, I think inflation is a big thing to be worried about for sure. I think it's probably a bigger concern for fixed income than equities. I think equities are a great hedge against inflation. But I'll tell you some of the things that we're doing for clients. I mean, one, we're looking at residential real estate, REITs. There's an iShares ETF that we like, REZ, that owns a lot of names like Public Storage and Avalon Bay. Our view is that if you want to be fighting inflation, you need to be an inflation-friendly asset. So we think real estate is one. We think gold's another, and maybe some of these cryptocurrencies. We're starting to, for the very first time in our firm's history, talk to clients about incorporating cryptocurrencies into their portfolios to a really, really small percentage.
Shepard Smith here. Thanks for watching CNBC on YouTube.